So the other day I was browsing Twitter and I saw this interesting thread by Joshua Tai. So in this video I want to talk a little bit more about the company that he's mentioning in his thread. I use Twitter quite a lot to gather interesting investment ideas, so today I wanted to share a few that I found this week. Just a quick note, this is not investment advice and this video should also not replace proper due diligence on the stocks mentioned. I merely wanted to put together a couple of interesting ideas that you can research on your own if you find them interesting. I got two cool ideas today that I found on Twitter. The first one is JD.com and the credit for the idea goes to Joshua Tai. This is not your traditional value investment, as most of the value comes from its future earnings power. The second idea is Crescita Therapeutics. This is a small cap and it comes closer to a traditional value investment as it's close to a net. It also has some decent earnings power. There are a few problems with the stock which I will discuss later. The credit for the idea goes to Holy Finance and I will talk about it later after I'm done with the first idea. As you know, Twitter is just full of noise usually. So what I try to do is find some interesting ideas that you guys can work with. So let's get started with the first idea I found interesting this week. The company name is JD.com. Anybody that follows e-commerce and Chinese stocks has heard the name before. JD is an e-commerce company operating in China. So what makes this company so interesting? I think it's their logistics network. JD built out the entire logistics network from scratch. They now have over 1,000 warehouses in China and can deliver packages to any part of China within a day. In some cases, the orders even arrive after a few hours of ordering. The company's profit margins are quite low because the company concentrates on building out the network. Wall Street doesn't seem to like it because it suppresses profits and margins, but one could also argue that this creates a lot of long-term value. As you can imagine, value is one of my favorite words, so I got very interested when I saw Joshua Tai's thread on Twitter. In the end, it will be up to you to decide how valuable this network really is. I just wanted to let you know that it exists. The flavor of the month at the moment when it comes to Chinese stocks is obviously Alibaba because Monga and Monish Pabrai bought it. But I also wanted to let you know that JD might be a good opportunity. The market appears to price JD.com just on their earnings at the moment, but I feel like a lot of people overlook the value that comes from the logistics network. My first thought was this: wow, this network, what could this be worth? What is a logistic network worth that can reach any part of China within a day? How much would it cost to build and replace such a network from scratch? So this is where a lot of the value comes from. So I found Joshua's thread very interesting this week. I added a link to his threads in the pinned comments below, so make sure that you check them out yourself as well. In his very detailed threads on Twitter, he describes that a lot of the value is coming from the logistics subsidiary. By the way, JD Logistics just recently got spun off, so you can also invest in it directly on the Hong Kong Stock Exchange. So here are some of his best tweets from his thread. Joshua put some great thoughts together, so make sure you check out his old tweet. I put the link to it in the comments area below. So let's talk about his thread. In his first post, he's pointing out that the Chinese logistics market is expected to keep growing and growing, so not only is it already massive, it's also getting bigger. Value investors love this kind of growth. In his next tweet, Joshua is talking about the nationwide warehouse logistics network that I already mentioned. They have more than 1,000 warehouses in China at the moment. That's 21 million square meters of warehouse space. And with this network, they can deliver packages to any part in China. So the next part is actually very cool. JD is famous for working on their autonomous delivery network. So they are planning to have drones and robots deliver packages in the near future. A lot of people don't know it, but China is actually facing labor shortages, so having autonomous delivery options will be very valuable in the future. The sheer size of China's e-commerce always blows my mind. They have 7,000 distribution stations that cover 450 cities in China. JD Logistics employs 190,000 couriers. Here's another interesting fact. During COVID-19 in 2020, JD.com was the only major retail company that was able to ship and deliver. This showed the power of the JD Logistics network. Joshua, of course, pointed this out in his thread as well. Make sure you check out his thread on Twitter and let us know what you find yourself. I would love to hear what you think about JD and JD Logistics in the comments below. Here's a little side note. Investing in China comes with its own risks. Some companies are currently facing regulatory scrutiny by the Chinese government, so this is something you should keep in mind when you research this and other Chinese companies. Another issue is the structure of Chinese companies. I would advise that you research more about this because it's not as straightforward as owning an American company. I believe Charlie Munger and Monish Pabrai took a lot of the fears away about investing in China with their recent purchases in Alibaba. But I would still advise you to research it yourself and see if you're comfortable with the risks. My video got actually a lot longer than I originally planned, so I will put my second idea that I got on Twitter into another video. I will post it in the coming days. So I hope you enjoyed this video. It's a bit different from the other ones that I made before, so I do hope you like it.